Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's bearish sentiment accelerated on Tuesday for the third straight session, and as we can see, it is very much on track to potentially challenge the key area which is seen at the 60-day moving average, which is at 66.60.80. As profit taking increases in terms of the fact that we reached a peak around 69 cents, and from the acceleration we may see further profit taking, is the minutes from the Reserve Bank of Australia still has a habit of surprising the markets. The minutes of the June meeting released yesterday indicated that the decision was finely balanced between a pause and a hike. However, concerns over the stubbornly high inflation, the central bank voted to hike rates by 25 basis points this month. Still, the RBA will likely continue to be full of surprises after raising rates to 4.1% this month, its highest level since 2011. At present, we should not rule out chances of another rate hike in July, but this all depends on economic data, which will dictate the move. Looking at the price action though, any upside attempt should find or limit around 68.20.30, and as I mentioned, the bears now look towards 67.70. A break there would strengthen the further to the decline, that is, and look towards 66.60.80 where this 60-day moving average holds. Now into the fourth consecutive day, the bears for the euro still remain evident, that is, as the market whipsaws. It is viewed that we now wait for the anticipated US Federal Reserve Chairman Jerome Powell's two-day congressional testimony, starting with the US House Financial Services Committee on Wednesday, then wrapping up on Thursday. Looking at the technicals, no doubt there will be further hawkishness from the Fed Powell, which may generate the dollar index, which measures the greenback strength against a basket of six major currencies, as it now looks towards 104.50.70. That would see further pressure for euro. A break of 108.80 would give further indication to the bear case and look towards the region of 107.70 and reassess from there. Having reached its objective of 142, the bears are back into play here for dollar yen, but I wouldn't get too excited because the technicals haven't broken down and therefore the bearish case may be short term. To confirm this engulfing candle, we do need to see a break of 140.80, and if so, that would give further weakness towards the region somewhere that comes in where this trend line is. That is, if I just highlight it at 138.40. Quite a distance, but nevertheless, keep an eye on this level of 140.80 to support the bearish case. Otherwise, we may see further tests to the upside. A clearance of 142 would give us 145 as a broader objective. Super Thursday is getting closer, with the Bank of England widely expected to hike rates by 25 basis points, and therefore could see a whipsaw movement. And keep an eye on these technicals to the RSI. We're not breaking down, and like previously, did rebound off the midway point and could do so again. A hawkish stance from the Bank of England may actually generate a move back to 130 as an initial target. So we shouldn't get too bearish yet for the sterling, just in case we do get that bounce. Overnight, gold dropped $20, and from there pressures the level of 1,928. I am still bearish, and I feel this level will eventually go after holding for at least a month, that is. Now, looking at the level of 1,928, a close under there would give exposure anywhere towards 1,850 as a target, with the immediate target seen at 1,912. Upside attempts should be limited, and that is seeing a cap around 1,944 to 1,952. Wrapping up with all, that was also whipsawed and posted a weak engulfing candle, but I'm not going to get too negative on this pattern. I feel that the midway point is holding respectively, and therefore we shouldn't rule out a test to the upside. But overall, we could see whipping it in this price movement in this tight trading range that we're viewing. But overall, it seems that we could be locked in at 68.70 to a $74, with the bias still to the upside. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.